And ideally, if you see, my procurement price was 100, my final selling price was 140. So what is my net value at? 40. How much is the GST rate? 20%. What is the tax payable? 5 plus 3, 8. So ideally it matches. So whatever is the value addition, ideally GST aims at paying taxes on the value addition. Very simple illustration on how the IGST model and the levy and the credit. Now, coming down to some certain key concepts, as I was mentioning, that let us talk on the things which is reading between the lines instead of taking you through the model law, because now more or less we all of us have attended a lot of seminars and stuff, and also people are more or less privy with the laws and how it functions and everything. Now, when we talk of the definition of supply under goods, now very interestingly this time, under GST, they have brought in the concept saying that supply includes free supply, barter, and supply without consideration. These three concepts, because in whatever way you see, even if I analyze the current law, you see, when we talk of service tax, if there is supply without a consideration, there is no service tax, because the definition of service itself says that there has to be a consideration. 65-45 if I am not wrong. Now, simultaneously if I look at VAT, definition of sale price says cash, deferred payment or valuable consideration. So also it talks of a consideration. It's customs duty you have to pay, but there is on. But under GST, they have introduced a concept of free. Today, that means even if I give a free issue, let's say a toothbrush comes with a toothpaste. Ideally, when we remove that, an excise duty is paid. But now there was no levy of VAT. So there will be a full levy of GST on that on a prorated basis. So here comes a concept. Now, very important, whether, let's say I buy, you give me a 125 grams toothpaste at a price of 100 grams. You see 25 grams free? But I take the price of 100 grams, whether that is a free supply or whether you give me a toothbrush along with a toothpaste, whether that is a free supply. In my view, the former is not a free supply because you are not giving or charging anything, while the latter becomes a free supply and you need to pay GST on that. So it changes the way you are doing business, how you are doing business. Your entire pricing and your entire workability of your doing business. Discounts. Yes, discount is still an issue under VAT in different states. But GST has come up with some concepts. They've said any discounts which are post-sale are not allowed. Which means, let's say I give you a volume discount or turnover discount at the end of that year, which is after sale I decide that chalo, this is an important deal, I pass him on this discount. You would not get a deduction from your transaction value. Only those discounts which has to be before the sale and should be known to a dealer through any means. That can be through an email, that can be through a policy or whatever, and should be passed on through an invoice. Only these are the discounts that should be allowed as a deduction under GST. So this changes again your entire product pricing. If you are in a manufacturer or in whatever way where you are passing on the discounts in different forms, It changes your product pricing because you now started thinking that how do I pass on a discount in a different way. That becomes very important. Then valuation rules. This is extremely tricky. What they have done is, under GST, they have brought in a unique concept and borrowed it from customs and brought in a concept of related party transaction. It was never under VAT, service tax and everything, it was only under customs. They brought it under as a related party transaction just to carve out the transaction of stock transfer. And said that such would be on a transaction value. Now, I give you an example, a simple example. Let's say today I do a stock transfer on which today I pay excise duty. Now there are different methods and means of valuing the stock transfer. Either it can be under cash for, procedure prescribed under the costing institute, or I do it under depot pricing system. So in case I do it on a depot pricing system, which is the value or the excise duty which I pay is the value on which I remove it from the depot. In case I do that in that method, then my depot price, my depot price gets covered. What would happen under GST? If I pay that value, then on depot there is no value add, because the depot, whatever price I'll take the credit of that. You have to change that pricing model. You have to work out a transaction value of your stock transfer, which is in line with the similar goods moved out as a stock transfer. Because what happens on a depot pricing method, there is a freight and some other costs are added back to a depot pricing, because you take the credit of the freight, and that is the reason you pay excise duty on a depot price. So you need to break that. Again, change your practice of doing business. Now, definition of service, very, very interesting. I don't know how many people have read the model law or has gone through it very minutely. See, before I get into the definition of service, I would like to tell you the definition of goods. Goods means, if I recall rightly, any movable property other than actionable claim, and they have given some certain exclusions. And service means anything which is not goods. This is the definition of service, trust me. So that means immovable property is a service under GST. When they have drafted it, they have made it in such a form which means immovable property is a service. That means tomorrow if you sell a land, you pay 18% GST. If this definition continues, then if you sell a land, you pay 18% GST if 18% is the rate of GST on services. Assume. So this is how the laws have been framed. So I just try to take you through. Now, again, the place and time of supply, as I was telling you, very interesting. Like, let's say this place and time of supply would ideally change the entire concept, because what ideally happens that in a place of supply for goods ideally is easier, no problem, because it's a tangible goods moving, so it remains the same whether it is at the time of movement or transfer of title or whatever. Only thing that they have changed is with the advent of GST, all these forms and everything will go away. So your E1 transaction, which is your sale in transit, which generally ideally happens at in a system where some from one you procured goods and ask him to deliver it to the site, and he says, he addresses the site, account you. So that would go away. So the entire transaction ideally will be taxed. He would bill, you would again bill, and everything would be under GST. So those things would not be there. Now, but again, when I'm talking of service, again I'm coming down, it would change your entire concept of what is today as an export of service and you're not paying tax, and it change your concept of import of service where you are paying tax. Why? For service, they have said, in case if you are rendering service to the registered person, it is the location of the registered person. In case if you are providing service to an unregistered person, that is, then it is the address of the person on record. God knows what that record means. I have not till date found out what the word record means. Which record? It is employment, income tax, service tax, which record? And or the address of the supplier of the service. Now let's say, in today's date, I give someone a goods to be exported out of India, or I provide a service to be out of India, sitting in India, and I'm billing to an Indian entity. Now what happens here? And that Indian entity is a registered person. You see how it changes. I give you two scenarios. One, I am rendering, an Indian entity has given me an order of providing a service to a foreign entity sitting from India, and I will bill to the Indian entity. And who would give me the money? In today's definition, in case if I render a service to outside India, unless and until, and let's say even if I assume the money comes in convertible foreign exchange, it ideally becomes an export of service. But under GST, that export changes into a taxable scenario because the billing is to an Indian entity who is a registered person, and it is the location of the registered person. Irrespective of the fact, I render it to a foreign guy. But other than that, in case the foreign guy gives me the order and I render it to the foreign guy, irrespective of the fact he has an office in India, since the foreign guy is an unregistered person, so that becomes an export. So my transaction, the transaction nature or the levy of tax changes on a service if it is a B2B or if it is a B2C. It entirely changes. So today, then under GST, I'll start thinking that no, I'll get the contract directly from him, not from the Indian guy. I will take it as export. So you again change your method of doing business. Because just through a B2B to B2C, your taxability changes. Today, there is an exemption under service tax. Again, like for any logistic service provider taking your cargo out of India, export of cargo. So, in case, because since the destination of the goods is outside India, there is an exemption under service tax, even if the payment does not come in foreign currency. But under GST, that will be taxable because I am billing to an Indian party. On the contrary, for an import cargo, since I am billing to an overseas party, for which today I am paying service tax as a recipient of service on the freight, that tantamounts to an exemption because I am billing to an unregistered dealer and the address on record, which might be the record of the invoice, is out of India, which is a non-taxable territory, so it becomes an exemption. So ideally, my entire levy changes just because of the place and time of supply. So ideally we need to relook in my entire business, my contracting, because today I might have a contract with other guy on a gross up basis or a net of tax basis, on which there might be an applicability of withholding tax. Tomorrow if GST becomes leviable, then even that taxability comes on me. So I have to again change and relook my contracts. That becomes very important. Now transitional credit, I have a slide on that, I will definitely take it forward. Now credit, as I was saying, credit, yes, you have a seamless credit, accepting certain restrictions they have prescribed, which is ideally the restrictions under service tax. They have just made it more worse, though in my view that will go away. Because if that credit continues, then the real estate sector would ideally not survive, in my view. But they have made a stringency in taking credit. How? How do we take credit today? In fact, yes, there is a purchaser mismatch concept, but ideally, when you receive an invoice, you take the credit. Tax invoice or a service invoice, whatever. But under GST, you can only take credit in case you actually adhere to 4 situations. 1, you have to have a valid tax invoice. 2, you have to have the supply of the goods and the services. That means on advance payment, you are not entitled to any credit. You have to receive the supply of the goods and the services. That means on advance payment, no credit. 3, the person supplying the goods and the services has to pay the tax and he has to upload the invoice. That means for someone else, I will be penalized. So it actually shifts the burden to the recipient to actually ensure that the provider is doing the things correctly. Other than that, the recipient will be denied with the credit. Incentives. You see today a lot of different states provide different incentives under the current law. Those incentives other than central sales tax will tantamount to refund. Central sales tax incentive, if it is there are certain central sales tax incentives in certain northeast states that will go away. So you need to negotiate with the state government because that would not be there. Now this is a slide which I'll now run through certain slides, which is a schedule which is without a consideration. There was some query that which is what without consideration. These are the supplies which would be taxable under GST if it is without consideration. Here there is a very important thing, leave aside stock transfer. These are, everybody knows. There is a temporary application of business asset to a private or non-business use. Today, I give my company laptop to an employee for private use. That would be subject to GST. You see, temporary application of business asset to a private or non-business use. So you need to plan that even before giving your laptop to your employee for personal use. Because that would ideally be subject to GST as per this present definition. They have done some good things and removing the age-old problem of whether this will be goods, whether that would be services. So all this host of services like works contract, transfer of right to use, restaurant, these which were both goods and services, software, they have said that these are services. So all these ambiguities would ideally not be there. So these are more or less covered. This is important. Now, transition credit. Now everybody knows that whatever, the first important thing that what credit I will get is whatever credit which I have disclosed in the return, only that credit I will get. So for a central act, I will get it against CGST. For a state act, I will get it against SGST. In case for inputs, both CGST, SGST, capital goods, both CGST, SGST. Now comes the most interesting thing. Yes, definitely stock lying unsold, what will happen if it is sold under GST? Again a question. But the important point is not there. Important point comes somewhere else. Let's say I am in the business of trading, simple trading. Under trading, I am not entitled to any credit of excise duty or service tax. What would happen to those credit or those excise duty or service tax for goods lying in stock as on 31st March? Because I would sell under the GST regime, where I would be paying tax on the entire value. So how am I eligible to that extent of the service tax and excise? VAT I am eligible to, I am ideally eligible. Because trading I am ideally eligible to input tax credit of VAT, but not CST. In case I am procuring it under CST, that even another question. What will happen to that CST? Simultaneously, let's say somebody doing service industry, whose only financial is income on which he pays service tax. It's a consulting engineering business. What would happen to the procurement which he has made, paying VAT, which would be used subsequently for providing him that business? $1 billion question. What would happen to those capital goods? Again, let's say I am a mine development operator. I have huge cranes which I transfer from one site to another, another site to another, another site to another. All this will attract GST. So what would happen to the huge VAT or CST or whatever, or customs duty which I have paid for that sad amount? Because again, service tax, I am not entitled to special additional duty. What will happen to that? So in case I have not declared it in the return, I am not entitled to that. So how are we planning on that, on such transactions, so that how are we thinking so that we gear up in such a way and plan from January onwards that this might be my goods stock lying as on 31st March, or I reduce my number of stock as on 31st March? How do I go forward? So again, I need to rethink my business. The methodology of doing business. So this is the most important thing. Beyond anything, I still remember what the Honorable Finance Minister said when he first spoke of GST. That is perhaps the biggest reform in India after 1947. And trust me that it is. GST just not only impacts your fiscal part, that there is a change in the rate of tax, 15% to 18%, or 12% to 20%, or something, 6% to 12%. It is far beyond that. One, definitely it impacts your fiscal part. It heavily impacts your cash flow. How? Barring the normal tax change, what it will bring in. How? You see, your entire procurement, if the firm sees E1 transactions and everything goes away, so your cost of procurement will go up. So today what you used to buy at 2% plus excise duty, you would start buying at 20%, because that 15% or 16% will go up to 20%. So your cost of procurement goes up. Your cost of import will go up. Yes, you will get a credit, but that credit would be blocked over a period of time till the time you can sell the goods. So that interest, so your working capital requirement goes up, resulting in an interest of working capital. Vis-a-vis the extra credit that you will get under GST, so you need to make that cost benefit analysis. Because under GST you will get credit of everything. Let's say in today's date you are not entitled to consumables, all those other credits under VAT, the central sales tax credit, that is an expenditure. Tomorrow you would be entitled to that. So that interest on the extra working capital vis-a-vis the extrapolated credits that you get, that gives you a cost benefit analysis under GST. It affects your pricing. Let's say today you are dealing in goods. So the moment it affects your working capital, because how your stock transfer becomes taxable. The moment your stocks are, so today you start paying extra taxes for every stock transfer that you do. So it affects your working capital. Yes, your depot, whatever takes, will take taxes, will take credit, sorry. But it impacts your working capital. So it affects your product pricing. Because at every chain today, you had a 28% tax or 20% tax or 15% tax or whatever. Today, you either there will be an increase in tax or a decrease in tax. So it impacts your pricing because there is an extra tax that you are paying. Because this concept of abatement under MRP will go away. So excise, so all these things would not be there. So you land up paying GST at a higher amount. So under such circumstances, you would have an impact on your pricing. Now, what would happen? There is a dealer margin, retailer margin at every stage. Then how do you negotiate with them? Why? Because tomorrow, in today's date, that every CNA for every dealer finances your stock, because at his place only your stocks are being kept. So he finances the place, he finances the software, he finances everything. But since he is into selling, he is not entitled to those credits of the services. Under GST he would be. So you start negotiating that you can't pass me on those costs in which today's date you are doing it. So ideally it again impacts how you are doing the pricing. So in every aspect, GST becomes extremely important. Your IT systems, because it shifts from an originating based to a destination based. So how you are doing your master code, your vendor code, everything, you have to put in the state code. You have to change your entire system of your coding, because excise, service tax, nothing would be there. So you need to change your CGST, SGST, everything. Your accounting. Why? I'll give you a unique example. Let's say I'm a listed company. I have a turnover of, let's say, 10,000 crores. Let's say on account of GST, my rate of taxes reduces. It is 28%, it became 20%. The moment it becomes 20%, my turnover top line reduces from 10,000 to 9,000 or 8,500. Because it is the change in the tax regime. My stock prices will go haywire. Because people would not understand that the decrease in the turnover is on account of the change of the tax regime, not account of any change in my business scenario. So SEBI has to come up with the guidelines on that, to how to account for such treatment. So to me, GST is nothing but a business process transformation. You need to change your looking in of your entire business, and it is the best time for all the professionals like us to actually grab this opportunity in whatever way possible. Because if you miss this bus, perhaps you miss the bus of your lifetime. Now, just I've tried to capture certain key impact areas. Manufacturing I have mostly covered. Power, very important. I do not know how many people have a captive power plant or anything, but still for the power is out of GST. I'm talking from a common point of view. Leave aside anybody is here from an industry or practicing whatever. Power is out of GST. Since power is out of the GST, so what happens in today's date also on power there is no levy of any indirect taxes. So neither there is excise duty or VAT or service tax, nothing. But what happens? The procurement cost of power was cheaper. Why? They used to either procure coal from locally at 2% with CST, or they used to import from within 5% to 8% coal. All other procurements was at 2%. There was an exemption on the service tax for erection and commissioning, because since power is exempted, any contractor or any subcontractor providing such service was exempted. All these things will go away. So what would happen? The procurement cost of power will go up, because power is out of GST, but all other vendors who are supplying to the power unit are under GST. So imagine the cost of power would go up manifoldly unless and until power comes under GST. Because ideally under the Electricity Act, they only levy electricity duty on the basis of whatever the cost is plus some overhead and profit. So automatically it will rise. If it is a captive power plant, today we used to take credit of the coal and everything against excise duty payable. Tomorrow, since GST is out, that creditability will go up, plus the increase of cost on account of non-availability of funds and everything. So my cost of production on that account goes up. It's a very big impact. So again, how do I do my business? Similarly, when yes, on a mining business, you see under mines there are different kinds of cesses and royalties which are being levied. These would not be subsumed under GST. So let's say in iron ore, we have certain royalties and cesses. Again, iron ore, I'll give you the simplest of example. Iron ore, there is no excise duty, but there is only a VAT. Tomorrow, from 5%, there will be iron ore will be 12% GST. The cost of iron ore goes up. Because these are indicative prices, because under GST all those different kinds of exemptions, these things are not there. There are a lot of representations going on, but what would be the fate and everything? So the mining cost goes up. So again my product prices gets affected. That becomes extremely important. Real estate. Leave aside the fact, please start buying houses before 31st of March, unless and until some miracle happens. I'm just not joking. Because today in West Bengal, let's say I talk of West Bengal, the rate is 4.5% service tax. There is no VAT. In case you are buying a property, tomorrow it will be 18%. Because there is no abatement under GST prescribed for real estate. And ideally, under GST, all these abatements and everything would ideally go away. Plus, as I have said, service is an immovable property. Immovable property is a service, sorry. So ideally you pay service tax on the land itself. Plus, what they have ideally said in an input tax credit definition, in restriction, that a developer are not entitled to any credit. Which ideally in my view should go away. So think of this situation of what would happen to the real estate scene once GST comes in. So ideally the cost of infrastructure will go up. Now can anybody tell me why everybody says that once GST comes in there will be inflation? Can anybody tell me why there will be inflation?
Because all the taxes are going up. Taxes are going up.
Why today the goods, all FMCG and every goods, commodity goods has a tax of 28%. It will go down to 20%. So why the taxes would go up?
The earlier increases, now people are coming under the ambit.
So that is how much? 80% already are taxable. They are saying 10 lakhs. So hardly it is the cost of compliance will go up. How many people will come under the ambit of GST? So by that, how would inflation increase? Because that would increase the revenue kitty. People will pay more taxes. So how will that increase the inflation?
More services. More services will be included.
You're near.
Services will be included.
You are more or less near. Actually, the correct answer is, you see, the rate of service will go up. So it will go from 15 to 18%. It will have more ambit of service and it will take away all the exemptions. And if you see, 56% of the GDP accounts towards services. So if that 56% there is an increase in the rate of GST, automatically inflation increases. Now it takes an entire cycle of 2 to 4 years to actually come to traverse this entire situation from where it started to where it ends. Because it will give you, somebody will take the credit, so all this it takes 2 to 4 years. So that is the reason everywhere where GST got implemented, ideally, there was a heavy rise of inflation for 2 to 3 years. And then automatically, not only the inflation came down, the GDP increased manifoldly. And there is another downfall to that. Everywhere that GST got introduced, by whichever government, that government got out. So, it is I'm talking of facts and figures. I'm not against any government, but this is an absolute fact and figure which is there. Because this might not be the situation because it is a need of the industry for which GST is coming in. It is not the need for the government why they are introducing it. So that is very, very important. Now I've covered this. Yes, supply chain. Can we cover everything on a supply chain? This is very interesting. You see what happens now since GST, it becomes a one India, one tax situation. Because across India there will be one tax. So CGST, SGST, IGST. So one India, one tax. So now what used to happen today, we used to have different depots across India to where I used to stock transfer and there I make local sale. So that my customers used to get that VAT credit. Because stock transfer ideally did not attract any taxes. Now under GST, when the stock transfer becomes liable to GST, I need to again relook on my supply chain. Do I keep so many depots? Do I keep so many warehouses? We were working with one of the largest electronic company of the world. So what happened, in a span of 100 kilometers, that company used to have 5 warehouses and that 100 kilometers caters 5 states. So for 5 states, they used to have 5 warehouses, but it was for a distance of 100 kilometers. Why they did it? Just to have that VAT benefit. So what they are rethinking that whether they can have just two things, two warehouses, two major warehouses, and increase the fleet of the logistics for delivery. I might have a central warehouse and keep small depots for my just-in-time delivery. Because in whatever cases, I would start having the same tax. But there is a downfall to that also. What happens? Many companies, what they do is, they become being a little bit monopolistic, or a product which they are manufacturing, and there are very few market players who are also doing the same. So they used to do a lot of CST sale, B2B transaction, a lot of CST sale. I know a lot of companies, and we are working with a lot of companies like that. So now the customers will become more smarter. They would tell them, you see, whatever things I buy from you, I will get at the same tax rate from the other guy. So I don't need to ideally have something, or I don't need to ideally have, I should not buy it from you. So he would start negotiating on a just-in-time delivery. He should tell you that previously you used to deliver me in 1 day, I need a delivery in 6 hours. Because for him, from wherever he procures, the rate of tax remains the same. So now he will start dictating you on the logistics price. Because he will tell you that you carry all the goods from Calcutta to Chennai, and you give me in your costing a logistics, I would not pay you that. I'll buy locally and I'll take a cheaper logistics price. From wherever I buy, I get the same rate of tax, but I will work around on my logistics. So how you work around on your supply chain, where you should keep your godowns, where you keep your warehouses, whether it will be your own or your CNF, that becomes extremely important under the GST regime. IT is covered. I think Shivani has already spoken of the 37 returns or 62 or 61, because in case for a larger company where you have providing, your head office is providing service as well as I know various companies where a head office provides service as well as he's an ISD for other branch offices or for other places. I give a typical example of a hotel. I don't know how many people have worked with large or are representing a hotel. A big hotel company, their head office is also providing service to different, because what happens, their head office raises bills on different properties where they are providing management services. Because a hotel has different types of business. It can be their own property, which is separately registered under service tax. It can be some other person's property, which they are managing. That bill is being raised by the head office. And there are different kinds of services that they render. One can be an intellectual property, management service. So the head office becomes a service provider. So 3 returns. The head office also becomes an input service distributor, because he also distributes to his own hotels for all the common expense. So 4th return. There is a provision said that any payment above 10 lakhs you have to deduct TDS. I don't understand the provision, because if a person needs to register above 10 lakhs, what is the question of TDS, that I don't understand. So again, 5th return. So ideally 61 returns per state for such company. Think of the pain. That company is to ideally file not more than 15 returns a year. You will end up with, no, it is 3 returns is blanket every month. So 36 and 1 annual. Now if you have ISD, that becomes 48 plus 1, 49. And if you have TDS, so 60 plus 1. So it goes on an arithmetic progression kind of a stuff. Every month.
Into number of branches?
Into number of branches, absolutely. So, how do we do it? First and foremost, For professionals, gear up with GST. For guys from the industry, prepare a GST committee. It might be the people, it should have people from finance, tax, purchase, sale, logistics, everybody. Do an impact assessment done to understand where we are today, how will it impact under GST, and get it revalidated once the final law comes in, and start working on GST, because yes, 1st April seems to be a steep target, but still, even if we take 1st April, it is only 6 months we have for this daunting task. Thank you.
Anybody is having any questions? You can do it. How VAT will be adjusted?
VAT will be adjusted in CGST, but 31st March. SGST, sorry.
So what about job work?
I didn't get you. Even today you don't maintain it stockwise,
So what would the exporters?
and that will be zero rating.
Like if we earlier we used to purchase it from central state against forms. So now whether we have to pay GST
You have to pay full GST and export it and take refund.
and then take the credit.
All those concepts of formage will go away. Penultimate purchases for export that will be
They are exempted and then we have to claim the
refund.
So one question.
Sir, suppose I have a pan-India based company, 29 states, I have the branches, I have registered with the 29, then the registration
In case,
number is...
in case it all depends whether it is goods or services. Now, in case you are pan-India based company and you are only selling from one state, you can take an IGST invoice and do everything. But in case you have a godown there or some...
Actually, we have 5 states, manufacturing, we have manufacturing concern in 5 states, and we have registered in
So you have to
the...
take registration in every state.
For all.
The number of registration is different in 29 states.
Different like, you have to take a GST registration. Might be the code for the state food vendor. That is including what?
Sir, what about virtual coaching classes? In so many states the classes are going.
So that is exactly what I'm saying, that where it is being delivered, that becomes a $1 million question. Whether that would be an SGST, CGST invoice or an IGST invoice.
So what about the job work industry?
Job work remains the same. If it is a normal job work, then whatever you send it, if you are sending the materials and he manufactures and gets it back to you, so you pay the GST. And the job work
Means they will be required to be registered.
so job work processing fee only would be a service. So you need to pay a GST on the huge charge. Whereas on a contract manufacturing, he would procure and he would say. So job work remains same as of today.
So what about e-commerce business?
For e-commerce business, they have said that, sorry, I missed it out. For e-commerce business, they have said that in case of any aggregator, let's say Flipkart or GoIPO or Snapdeal, when they would pay to the supplier of goods,